All right, so today we're going to be looking into the Fed's recent decision to hold interest rates steady.
Yeah.
Which is a pretty big deal, especially since they've been cutting rates for a while now.
Right.
And we've got some excerpts here from this article titled "Fed Holds Rates Steady, Takes Less Confident View on Inflation."
Okay.
And we're going to try to figure out why exactly the Fed decided to kind of hit the pause button.
Yeah.
What are they seeing in the economy, and what does this all mean for us going forward?
Right.
And we'll also talk about how the new president might be playing into all of this as well.
You know, this pause is really interesting because it kind of throws a wrench into this whole easing monetary policy trend we've been seeing.
Yeah.
Makes you wonder what's shifted in their perspective.
Exactly. So to set the stage, the Fed decided to keep its key interest rate unchanged, holding it between 4.25 and 4.5%. And this comes after 3 straight rate cuts since September of 2024.
Right.
But here's where it gets even more interesting.
Okay.
This is the first Fed meeting since President Trump took office. And he has been pretty vocal about wanting them to cut rates even further. So talk about pressure.
Yeah, it's almost as if the Fed is trying to assert its independence with this decision.
Right.
The article points out that, holding rates steady is a pretty bold move in this political climate.
For sure. It definitely sends a message.
Right.
But let's get into the logic behind it. What's the reasoning?
Well, their official statement paints a pretty optimistic picture of the job market.
Yeah.
They specifically mentioned that unemployment has stabilized at a low level.
Okay.
And that labor market conditions are looking pretty solid.
So things are looking up on the employment front.
Yeah.
That's good news.
Yeah.
But we can't ignore the elephant in the room, inflation.
Absolutely. The statement acknowledges that inflation is still somewhat elevated.
Okay.
But what's really interesting is they removed a phrase from their December statement where they said that they were making progress toward their 2% inflation goal.
Yeah.
So it's like they're admitting that they might not have as much control over inflation as they thought they did.
So less confidence in taming inflation.
Right.
And this is where things get really interesting for all of us.
Yeah.
We've got this strong job market, which is usually a good sign.
Right.
But we've also got this persistent inflation eating away at our purchasing power.
Yeah.
It's a bit of a tightrope walk.
It is a strong job market.
Yeah.
Encourages the Fed to raise rates to prevent inflation from getting out of control.
Yeah.
But when inflation is this stubborn, they often consider lowering rates to stimulate the economy.
Right.
So it's a tough spot to be in.
How do you even begin to make a decision?
Well, the article mentions that some policymakers are worried about the slowdown in inflation reduction.
Okay.
They're seeing that 2% target slip further away.
Yeah.
On the other hand, some members want to see how the previous rate cuts play out before making any further adjustments.
Okay.
Give the economy time to absorb those changes.
Makes sense. But let's not forget about President Trump.
Right.
The article even uses the phrase volatile political backdrop when describing this decision. I mean, since taking office, he's already made some big moves.
He has.
Tariffs, immigration measures, deregulation. It's been a whirlwind.
Yeah, and it's important to remember that he's been publicly pushing for those rate cuts.
Yeah, he has.
He even said he would demand immediate action, which adds another layer of complexity to this whole situation.
Yeah, for sure.
Now, we know the president doesn't have direct control over the Fed,
Right.
but that kind of public pressure could definitely strain the relationship between the White House and the Fed.
Yeah.
We saw hints of that during his first term.
Exactly. So the question is, could this political pressure actually influence the Fed's future decisions?
Yeah.
Are they truly independent, or are they feeling the heat?
It's tough to answer definitively.
Yeah.
In theory, the Fed is supposed to operate independently,
Right.
making decisions based on economic data, not political whims. But realistically, it's hard to completely ignore that pressure coming from the Oval Office.
Especially when it's so public.
Right, especially when it's being broadcast so publicly.
Yeah, it's like a game of chicken with the economy hanging in the balance.
Right.
So let's talk more about inflation. While it's come down since its peak in mid-2022, it's still not at that 2% goal the Fed is aiming for. In fact, their preferred inflation gauge actually went up to 2.4% in November.
Wow.
That's the highest it's been since July.
And core inflation, which excludes those volatile food and energy prices, is sitting at 2.8%.
So is the Fed being too ambitious with its 2% target, or is inflation truly more under control than it seems?
It's a question worth considering.
It really is, and while the Fed ponders that the markets are already making their own predictions,
Yeah.
the article mentions that traders pretty much expected the Fed to hold rates this time around and are betting that the next cut won't happen until June. They're also predicting that the rate will be around 3.9% by the end of 2025, which means there's a 61% chance of 2 quarter percentage point cuts happening this year.
Okay.
So we've covered the Fed's decision, their reasoning, the inflation puzzle, and even the president's influence.
Right.
But how's the overall health of the economy looking? Are there any other factors we should be aware of?
Well, the article states that economic growth in 2024 was pretty solid, with consumer spending remaining strong.
Okay.
The Atlanta Fed estimates a 2.3% annualized growth rate for the fourth quarter of 2024.
All right.
Now, that is a bit lower than their previous projection of 3.2%, mainly due to some weaker data on private domestic investment.
So even though things seem good on the surface, there are some underlying indicators that could signal a shift in the Fed's approach down the line.
Right. It's like there's always something lurking beneath the surface.
It's never a simple black and white picture.
Exactly. There are always nuances to consider.
Yeah.
That's why it's so important to stay informed and keep an eye on these different economic factors.
It's like piecing together a puzzle.
Exactly.
Speaking of things to keep an eye on, there's been a change in the voting composition of the Federal Open Market Committee.
Oh, right.
Or FOMC for short.
Right. The FOMC now includes regional presidents, Austin Goolsbee, Alberto Muslim, Susan Collins, and Jeffrey Schmid as voters alongside Chair Powell and the other board of governors.
Wow. That's a lot of new people.
It is, and it's interesting to note that the decision to hold rates steady was actually unanimous.
Wow.
Despite all the complex economic factors we've been discussing, the policymakers seem to be on the same page.
For now.
For now.
That's a great point. It'll be interesting to see if that unity holds as we move further into 2025.
Yeah.
But for now, let's take a pause right here and come back in a moment to unpack what all of this means for you, the listener.
Sounds good.
Welcome back. We just took this deep dive into the Fed's decision to hold interest rates steady.
Yeah.
We explored the rationale, the whole inflation puzzle, and even the political pressures they're facing.
It's fascinating how one decision can have these ripple effects through the whole financial landscape.
Right. It's like everybody is trying to decipher what the Fed's next move is going to be.
Yeah.
But now let's shift gears and talk about you.
Yeah.
How might all of this impact your everyday life and your financial decisions?
Because at the end of the day, this isn't just about abstract economic theory. This is about your wallet, your savings, your future.
Exactly. So let's acknowledge the elephant in the room. The economy is a complex beast.
It is.
We've got this strong job market, which is fantastic for anyone looking for work or hoping for a raise.
Right. A healthy job market is always a good sign.
But at the same time, we can't ignore that inflation is making everything more expensive.
Right.
Groceries, gas, housing, it all adds up.
It all adds up.
It's like this constant tug of war between good news and bad news.
Yeah.
And the Fed's decision to hold rates steady just adds another layer of uncertainty.
It does. Are they signaling confidence that inflation will cool down on its own, or are they just delaying the inevitable need for more rate cuts down the line?
It's enough to keep anyone up at night trying to figure out what it all means.
And that's why we're here to help you make sense of it all.
Yeah.
So what can you do to navigate this complicated economic landscape?
Well, I think the first step is understanding the forces at play. Knowledge is power.
Absolutely.
The more you understand about what's driving the economy, the better equipped you'll be to make informed decisions about your own finances.
I completely agree. Don't just rely on headlines or sound bites. Dig a little deeper. Explore different perspectives and form your own opinions. That's what the deep dive is all about.
Yeah.
We're giving you the tools and the information you need to become like an active participant in your financial well-being.
Exactly. We want to empower you to take control of your financial future.
Right.
So let's get practical. What are some concrete steps our listeners can take right now?
Well, for starters, take a good look at your budget. Do you have a clear understanding of your income and expenses? Where can you cut back, especially if you're feeling the pinch of inflation?
It's like giving your finances a checkup.
Yeah.
You might be surprised at what you find. I know I was when I recently reviewed my own budget. Those small recurring expenses can really add up over time.
That's a great point.
Yeah.
And while you're at it, think about how inflation might impact your long-term financial goals.
Okay.
If you're saving for retirement or a down payment on a house, you might need to adjust your strategy.
Right.
Inflation can erode the value of your savings over time, so it's crucial to stay ahead of the curve.
That's such an important reminder. Don't let inflation sneak up on you and derail your plans.
Right.
A little planning and adjustment can go a long way.
Absolutely.
Yeah.
And finally, don't be afraid to seek professional advice.
Yeah.
If you're feeling overwhelmed or unsure about how to navigate these economic waters, talk to a financial advisor. They can help you create a personalized plan that aligns with your goals and your risk tolerance.
That's great advice. Sometimes having an expert in your corner can make all the difference.
Yeah.
It can help you feel more confident and in control of your finances, which is especially important during times of uncertainty.
And remember, you're not alone in this.
Yeah.
We're all trying to make sense of this constantly shifting economic landscape. We're all in the same boat.
That's right. And that's why we're here to help you navigate the complexity and make informed decisions.
Absolutely.
We've explored the Fed's decision to hold rates, study the economic factors at play, and the potential implications for your personal finances.
Yeah.
But before we wrap up, we want to leave you with a thought-provoking question to ponder.
Okay, hit me with it.
Given all the uncertainties and conflicting signals we've discussed, what are the potential risks and opportunities for the economy in 2025? And how might they impact your individual financial decisions?
Right.
We really want you to take what you've learned today and apply it to your own life.
Yeah.
This isn't just about abstract economic theories. This is about your financial well-being.
Exactly. This is about taking control of your financial future. So spend some time reflecting on these questions. What are your financial goals? What steps can you take today to position yourself for success in the years to come?
Those are great questions to consider. And remember, we're here to support you on your journey. Now let's take a quick break and we'll come back to wrap up our deep dive into the Fed's decision and what it means for the future. Okay, so we've covered a lot of ground in this deep dive, exploring the Fed's decision to hold interest rates steady.
We have.
We unpacked, their reasoning. We grappled with these mixed signals in the economy.
Right.
And even touched on, how to apply all this to your own financial life.
And we did it all without getting too lost in the weeds of technical jargon or, complicated economic theories.
Exactly. We want to make this accessible to everyone.
Yeah, we believe that everyone deserves to understand these issues.
Yeah.
Regardless of their background or their, financial expertise.
It's all about empowering you, the listener, to make informed decisions.
Absolutely.
But before we wrap up, let's take a moment to recap the key takeaways from our deep dive.
All right, let's distill it down to the essentials.
Yeah.
So first and foremost, the Fed's decision to hold rates steady. This is a significant shift after those previous cuts, right?
Uh-huh.
It signals a change in their thinking, a more cautious approach to navigating this current economic landscape.
Right, and we can't forget about those mixed signals we keep talking about.
Yeah.
On one hand, we've got a strong job market, which is definitely a positive sign.
Absolutely.
But on the other hand, there's that persistent inflation that just keeps chipping away at our purchasing power.
It's a classic economic dilemma.
Right.
And it makes predicting the future even more challenging.
And of course, we can't ignore the political pressure coming from the new president,
Right.
his public statements about, wanting lower rates.
Mm-hmm.
It just adds another layer of complexity to the whole situation.
For sure.
Makes you wonder about, the Fed's true independence.
Yeah, it's a good reminder that economics and politics are often intertwined. Yeah, they are.
And it's important to be aware of how both forces can influence, decisions.
So where do we go from here? What can we expect in the coming months and years?
Right.
Feels like we're standing at a crossroads.
That's the million-dollar question, isn't it? Unfortunately, we don't have a crystal ball to predict the future.
I was hoping you had one tucked away in your back pocket.
No such luck. But we can use, the information we've gathered today to make some educated guesses.
Okay.
I think we're going to continue to see this push and pull between positive and negative economic indicators. The job market might remain strong, but inflation could continue to be a problem.
It's like the economy is on a seesaw, constantly shifting back and forth.
Exactly. And the Fed will be walking a tightrope, trying to balance these competing forces.
Right.
We'll likely see some unexpected twists and turns along the way.
Well, that's what makes it also fascinating, right?
Right.
The economy is constantly evolving.
Yeah.
And there's always something new to learn. It's like a never-ending puzzle. Absolutely.
Yeah.
And that's why we encourage you to keep exploring these topics, keep learning, and stay informed.
Yeah.
Don't just take our word for it. Go out there, read articles, listen to other podcasts, talk to experts, and form your own opinions.
That's the beauty of knowledge, right?
Yeah.
The more you learn, the more empowered you become to,
Absolutely.
make decisions that are right for you and your unique financial situation.
Exactly.
And remember, the deep dive is always here to help you navigate these complex topics.
That's right. We're your guides to understanding the world around you.
One deep dive at a time.
One deep dive at a time.
Thanks for joining us on this journey, and until next time, stay curious, stay informed, and keep on diving deep.